Hello guys, welcome to the Trading Parrot. It's a really tough Monday. You can see that everything is in red. I wanted to take a few days over the weekend to take a break, but found really difficult to 100% disconnect, seeing all the events entering into a snowball effect sooner than I was expecting. And at the worst time, typically when you want to take a break to chill and relax, and the market comes and knocks on your door and tells you it is that time. In today's video, we are going to look into the indexes, macroeconomy, how things are looking. I want to look particularly into the VIX, the dollar index, S&P, NASDAQ. And yes, guys, I'm starting my day looking there because the things that are happening today have nothing to do specifically with crypto. Yes, the bloodbath in crypto is huge, and I'm gonna make a separate video about what's going on with Bitcoin, the altcoins, but I have to cover first the source of the problem. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you don't miss any more of these videos. And if you feel like supporting the channel, watch this video until the very end and do not go anywhere without leaving a comment down below. Thanks so much for that. So yes, guys, it took me quite a few hours to get the courage to start looking into the charts. It's really overwhelming to see all the data coming in. My Twitter keeps coming with more bad news. As I mentioned, I think a month ago, I sold all my stocks. Luckily, I have most of my bots switch off since 3 days ago, but still I'm holding a lot of Ethereum, a lot of ADA, XRP, things that I accumulated as well during the bear market, and seeing that everything reversed in many cases to negative. No matter how many cycles you've been in crypto or trading stocks and indexes, a crash like this makes you humble in many different ways. And I hope you guys are still managing to have a good day and not too overwhelmed or too emotional either. So more than thinking that this is the cause of the problem, I will say that this was the straw that broke the camel's back. In my opinion, from a long time ago, we've been seeing that the rally on the S&P, NASDAQ was driven by AI humbly moving up, or even some of them have been mostly in a downtrend. So we were all the time looking for when can the AI bubble pop. So what was the breaking point that is affecting all markets at the moment? I think it was the perfect storm. People watched the FOMC meeting. It seemed to me that they were not even necessarily convinced that they were going to cut the rates in September. They mentioned something like, if we see that the inflation comes down, we might as well reduce the interest rates. And that disappointed lots of investors that almost count on a heavy interest rate cut to be able to see the markets perform. Not just to see the markets perform, but also to potentially save the day for a catastrophe like the one we are seeing today. And just a few days after, on Monday, we learned about the yen carry trade. It all started with the Bank of Japan that decided to raise rates in the most recent meeting. They raised the rate to 0.25. This is the second time they do it since 2007. And for years, traders have been taking advantage of these ultra low rates. For example, people were able to convert into dollars and other currencies and get almost free margin. Here's an example of how they were taking advantage. By increasing their interest rates, they spoiled this particular setup. And as a result, the Japanese yen strengthened and the USD JPY currency pair completely tanked. You can see how it went from 162 to 142 in just a few days. The Japanese market can easily have a snowball effect in the rest of the markets, particularly when the rest of the market is in such a delicate state at the moment. Basically, all it needed was a push like this for everything to collapse. Miles mentioned a summary of why crypto is crashing in particular. Trump presidency, odds decreasing with Kamala, the recession fears, stock market correction, yen unwind, geopolitical tensions, jump unwinding positions, GOX distributions, recent pump trap fresh longs, and altcoin dispersion. From Kovici letter, we have a very good summary here. Japan's stock market is officially in correction territory. Bitcoin are down 11 and 20%, at least at the time this went live. The NASDAQ 100 is officially in correction territory. 10-year note yield is down 60 basis points in 1 week. The unemployment rate is at a 3-year high of 4.3. I remind you that the unemployment rate is a leading indicator to understand when an economy is going through a very difficult situation. It's one of those aspects that can force the hand of the Fed to reduce the rates, because they cannot afford to have people unemployed, at least above certain percent. The volatility index is up 100% in 1 month. Most of these things that are in this list do not sound like a soft landing that they were expecting to happen. And everybody at the moment is looking at those interest rates. During COVID, they took too long to start increasing them, creating a massive inflation problem that we all know is kind of the main topic for over a year. And right now, once again, they're taking too long to reduce those rates. Those rates have put too much stress in the economy, not just of US, but this affects the rest of the world with such a large economy. Pretty much every country has massive inflation at the moment. And at the same time, most big economies have already placed 0.25 cut rate, whereas US is still waiting to do that. Almost 2 trillion are wiped out of the US stock market today. We can see that with this sell-off, we have never seen on the NASDAQ 1,000 points ever, not even in an intraday on this index. Wharton's Professor Siegel calls for 1.5 rate cut, 0.75 as an emergency meeting, and another 0.75 in September. In all the previous instances where we saw the inflation being extremely high and then the rate cuts coming in, we have a handful of examples where the interest cut comes right at the moment where the market has a collapse. We're talking about even a 50% collapse in the indexes. But there's also, I believe, 2 or 3 other instances in the past 100 years where actually the rate cuts have no correlation with having any crash. Breaking, the Fed calls for an emergency meeting today regarding interest rates after Japan's market collapse. Every single time the unemployment rate high as today, we have a recession, just as the Fed was too slow to tighten in 2021. It looks like they were too slow to ease in 2024 as well. In my past video about the stock market and the indexes, we've been paying attention to the VIX, the volatility index. We mentioned we were expecting to see a breakout anywhere in this area around here. So anytime from July 2024, which we were at resistance right here at 17, we say that this could be just another rejection like this one in the volatility, or it could break out. There was a squeeze that couldn't go beyond the 11th of March next year. So I was expecting to see a breakout, but it took less than a week to see that breakout. And that part took me as surprise. We had on the first week 29, and this week we are already at 65. That is way beyond my expectation of 46 that came from the previous peak that we have in 2018. The reason I was expecting something not as large necessarily is because this was the peak of COVID, which is quite large, and this one is the one from 2008. And as you can see, since 1990, we are at the 3rd largest peak. Now, if we focus on how these peaks are in a weekly chart, you can tell that you can perfectly spend multiple weeks going higher in the VIX. For example, in COVID, this took 1, 2, 3, 4, 5 weeks to peak. That is longer than 1 month for the volatility to settle and for the indexes to start looking for a recovery. And in 2018, we could say that the break was from this accumulation here, but the actual moment that it starts going higher, I will count 1, 2, 3, 4, 5 weeks again, finding that top. So if we were to repeat a similar behavior in here, I will feel comfortable saying that we have already spent 2 weeks going higher. We should at least expect 3 more weeks. How does that translate into the indexes itself, the S&P, the NASDAQ, the Russell, and ultimately crypto? Well, during COVID, you can see that we spent 5 weeks going down before building this green engulfing candle, the money printer restarting, and then we start the up-only recovery. I'm not saying necessarily that this needs to play out in a similar way. Obviously, during this period in COVID, the lifesaver there was printing trillions of dollars. And yes, they are reactivating the money supply in China and US. That is coming, but it depends on how much really they're willing to print in here, and if the economy can tolerate a second wave of extreme amounts of printing while being in a high inflation environment at the same time. What I mean, this is like having a second cold, but the second time, instead of being a cold, you have already pneumonia, and you think that you can cope once again just having a little bit of paracetamol. Yes, that can help reducing the symptoms, but things can still go a lot worse. Let's look at the S&P. Last week, we were looking at this head and shoulders. We admit that it's not a perfect formation, but it's got the nature of a head and shoulders because we have a low high, then a higher high, and then a lower than the middle high on the right hand side. And we have broken from the neck, and the target based on the high of the head in here is at around an RSI of 32. That coincides with the percentile that is around 30 to 31, not very far. If we look at the current price action of the S&P, which has already broken the target of the hive, today trading at 5,181, we could see from here some sort of dead cat bounce into resistance, not necessarily at the trend line, it could be lower than that, and then further continuation to the downside. This target of RSI 31 plot in the chart corresponds with 4670. If we were to have this trajectory, it's a bit lower than the white trend line, meaning that if it actually plays out, we could be breaking down not just from the local support that we have here in the weekly, but also from this longer term support that spans from the bottom of COVID. It's quite a scary scenario. Yes, we will probably find very good support at this 4730 that was heavy resistance, and it could become support. But if we were to close lower than this top at around 4670, I will say that pretty much guaranteed we have a move that could take us to very scary levels like 3548 located around here. So at the moment, it all comes down to the money printer. How much are they going to print? How quick are they going to cut the rates? Although I still think that the rates, even if they come, they're coming too late. The damage has already been done, and now it's going to take some time for us to see the effects on the damage. But it also will depend on the geopolitical events that are currently getting quite hot and potentially seeing other economies joining the collapse. It could be that Japan is just the first one to come. We also heard some bad news from Taiwan today. The banking system is under a lot of stress. None of these things are just fad. These things are happening. The stress is there. It's just a matter now of assessing whether that stress is enough to break the structure or not. Let's look at the NASDAQ. Also broke down our support on the weekly. It's building there a massive gap. We have a green candle forming on the beginning of Monday. We can also have a look at the Japan 2025, since this is now on the epicenter of all the macroeconomic news. These are the Japanese stock market. In COVID, it went down almost 33% from the top, right after having a high signal, similar to what we have here. And from the top, so far, we have done 28%. So just a 5% additional, and you will get something very similar to COVID on the Japanese Nikkei 225. The S&P still hasn't done as big as a move. We have a 10% so far, and in COVID it did 35%, whereas the NASDAQ did 29%, and so far we only have 16% down. Let's have a very quick look at the top 7. Well, pretty much everything has corrected decent amount of numbers as expected, starting with Nvidia with a correction of 35%, Google, Apple, Amazon, many of them also showing a breakdown in the momentum and going back into the previous range. This is starting to look closer to Black Swan event, at least when it comes to the volatility index. In the last 30 years, we don't have anything as high as these numbers. And considering that when we get to these high numbers, it takes about 5 weeks to find a bottom, it's really tough out there. And I hope you guys are all doing well. Let me know in the comments how you're doing, and if there's anything that I can help. If you want me to review a particular coin or a particular stock, I'm happy to do that as well. Thanks so much for watching. I'll see you later in the video about crypto and altcoins. Bye bye.